Hello and welcome to Franchising Uncut. I'm Bruce McFarlane, CEO of BDC Partners. After the success of our Tell Us Your Effing Story series of franchisor interviews, we decided this year to go deep and dive into some of the big issues in franchising. Today, I'm here with my co-host Jon Sully and Richard Cholewick from Benjamin & Benjamin Insurance. Welcome, gentlemen.
Thank you.
Thank you for having me.
Great to see you. And so, obviously, one of the biggest issues at the moment is inflation, cost of living pressures. You know, from a household point of view, it's a massive thing. Everybody's trying to cut costs everywhere. But from a business point of view, when you're sitting there looking at your P&L, going, I need to cut some costs because potentially revenue's gone down as well because people are not spending as much money. So, you know, at Benjamin, you guys deal with franchisors, you deal with franchisees, you're dealing with the whole sector. And you know, what are you saying? What's happening with the people there saying, I need to cut some costs, so I'm just going to cut out my premiums, or put some pressure on you guys to reduce your premiums, which is, how's it going?
It's a little bit of everything, to be
Bit of all of that.
There's always the fun conversation with the business owner who says, can you do something about my premium, please? And we always, as an insurance broker, we always look to try to deliver the best possible value that is out there. But at the same time, you want to make sure that the policy is specific for the business, or more importantly, deliver if they need to make a claim. So it's a combination of different things. But you're right, there is certainly the pressures around cost of living and obviously the cost of doing business. And unfortunately, there are a number of business owners that, when it comes to insurance, will look to cut corners, or unfortunately will just not renew their policies, which can have a detrimental impact. If at the point in time they need to make a claim. Because
whoops.
yeah, sorry, we don't have insurance for this. How are we going to pay for this out of our back pocket? But even trying to cut some of those corners can have an impact on them, even when in an area where they don't think it may come back to bite them.
So from a franchisor point of view, they have, in the franchise agreement or in the manuals or whatever, they're saying the franchisee must have 1, 2, 3, 4, 5, 6 types of insurance policies. From your point of view, there's a bit of an education process for your franchisees, often not knowing which are the must-haves, and I have to have this one, and which are this would be nice to have this, but does that come up, like things that...
It does, it certainly does. There are regulatory requirements, particularly around employees and managing and looking after employees, which really is this is non-negotiable. You really must have this, and particularly around work cover. Which does fall to the responsibility of the business owner. As a broker, there's not much that we can do around that because policies are set by governments. The governments identify which insurers will provide those policies, and in some states it's one. In other states there could be half a dozen or more. So it's a really case of go to those that are appropriate to the policies are set, and as a broker there's not much that we can do. For different business owners, there is an opportunity to look at effectively almost self-insuring, but you need to be at 250 to 300 employees plus until you get to that point. But again, there are corners that can be cut. One of the ones that we see more often than not is particularly around insurance around property and valuations, where somebody says the rebuild cost of this property is X, and somebody might turn around and say, oh well, can you, instead of X, can you make it Y, which might be half of the value or 70% of the value, thinking that they may be able to get a significant reduction in their premium, which they may. Again, the problem is what happens if something happens to that building, and they need to make a claim, and there is a thing in Australia called underinsurance, which is a calculation that insurers work towards. Many business owners don't understand that this is a calculation that insurers will apply, and it can come back to bite them, unfortunately, if somebody does find themselves in around their property. And it doesn't matter whether it's the residential property or certainly the business property. If it's underinsured, it can come back to drastically impact them moving forward.
But that's in the franchise agreement for insurance for the franchisees. This is what you got to do. Blah blah blah. What about for the franchisor? There's nothing obviously regulatory.
Well, yeah, we started with your employees, and I guess as a franchisor, probably depends. If you're running sites, then there's the building stuff. So public liability is in the lease. So regardless of who's holding the lease, who's got the responsibility for the insurance.
And that will vary from franchisor to franchisor in relation to if the franchisor holds the leases, or if it's down to the individual franchisees. And yes, as part of that lease agreement, typically there will be public liabilities required. There'll be, in relation to breakage of glass if anything happens around the property from that perspective. But again, if you have employees, there's a thing called there's a policy called management liability, which can cover you for, particularly for things that may happen around your employees. Travel policies, but going back to management liability, in today's environment where an employee might find that or feel that they've been harassed or that they have been slighted in some way, or if they've been discriminated against, if somebody needs or chooses as an employee to make a claim, that will be managed under their management liability policy.
And that's the same as, is that like unfair dismissal and stuff like that? Is that
absolutely
covered? Yeah. So if you end up with a claim with an employee for any of those types, not an accident, which is work cover.
Correct. Yep.
Yeah.
And the interesting thing, is there are instances where people have had a claim against them as a business owner by somebody that's not actually even an employee, even through the recruitment process. If somebody feels that they've been discriminated against and therefore they weren't given the job because they feel that the employee viewed them in whatever capacity that they weren't successful in getting that job, and somebody makes a claim, again, that claim will be managed and handled under management liability.
And can a franchisor take management liability insurance out that covers their franchisees?
The management liability will take care of, there's multiple different components within management liability, and one of those is around employee relations. So again, as a franchisor, it will protect them for things that happen with regards to their employees themselves. If they're looking at franchisors, then again, depending on the structure, there's a number of different policies that they may want to take out. Franchisees, if they're going to make a claim against the franchisor, typically that will come under professional indemnity, because it would normally happen as a consequence of, as the franchisor, you gave me this expectation, or I was sold this expectation.
So misrepresentation claims are professional indemnity for the franchisor. So the franchisor needs both management liability and professional indemnity. So what about, it's not as common anymore, but the wage theft cases. And so the franchisees have made a mistake, haven't paid the right wages to their staff. There's a claim made. The franchisor gets dragged into it because they're liable under employment laws. So
that would again be addressed under management liability.
So the franchisor can cover themselves to a degree.
Yes.
Okay, I didn't know that.
So, and the franchisee, so there's a claim because they mispaid them by $5 an hour for every one of their staff.
So the franchisee, we encourage franchisees, if they have got direct employees or dealing with contractors, again, that they would want to take out a management liability policy for themselves.
Okay.
There are some policies that will apply certainly to both franchisor and franchisee. The franchisor liability around misrepresentation by or to franchisees, where if there was a claim that would be addressed under that, that's a policy that specifically we encourage franchisors to take out.
Okay.
Is directors' insurance, isn't there that's different again?
So again, there is a component within management liability that will give protection to directors and officers. The directors and officers as a policy, something that most business owners will be aware of, but the reality is, unless you're a publicly listed company and earning $250 million plus, there is no need to take out a specific directors and officers policy. Okay. There is a component within the management liability that will provide exactly the same protection, but at a far lower premium than taking out a separate directors and officers.
Yeah, often, and like bringing it back into small business land, that they're not normally independent directors at a franchisee level, and often even at a franchisor level. So they're pretty much engaged in the activities of the business, and so they know what's going on. I think where directors and officers, it often comes with there's an independent director coming in, and they're not really, they want to be protected because they're liable personally for certain things.
Does that include advisory boards? Are they exposed at all?
Interacting as a director, yeah.
There is a role that they play.
They shadow directors, or
they could be considered. Depends on their
shadow directors from a governance point of view is something slightly different. But again, the role of the broker is to understand the business and the business structure. So, how is the business formed? What's its structure? Is it under a trust? How's it structured from an advisory? What are the owners, etc.? and then spending the time to understand the structure and the nature of the business, franchise or otherwise, the role of the broker is then to say, these are the exposures and the risks that you have, whether it be around employees, whether it be around protecting the owners of the business, etc. And then to say, these are the relevant policies that will be applicable to you, that will address the risk, and then the business owner will then take that information on board and say, in line with my risk tolerance, this is what I'd like to do.
Okay, so here, I'm a franchisable. I have 20 stores, outlets, franchises, and I come to you as a franchisor. What do you say is the insurance, to Bruce's point from before about franchisees? What do I have to have?
Again, we would like to understand the nature of the business, but there would be franchisor liability because they are selling businesses to others, being the franchisees.
And that's a specific policy. That's not professional indemnity.
It is. There's a couple of different components, but it will be structured around them as a franchisor. So it's a specific policy as a franchisor selling franchisees to others.
Okay.
There is professional liability as well, and again, depending on the business in question, sometimes you'll certainly look to take both because, again, based on the potential exposure and how that exposure may come back through a claim. Some claims will be managed under management liability, some will be managed under professional indemnity, etc. So it's about,
Activity based.
Absolutely, from that point of view, you definitely want to be able to protect your the scenario regarding your employees, regarding your franchisees. You want to be able to look at things around cyber and data protection. So again, if the franchisor has an online portal, or if they have through their electronic communication through their website and they're managing that process and they're capturing the data that's coming through, they would certainly want a cyber and data privacy policy.
So that's the franchisor, not the franchisee at this point.
If the franchisor is providing that,
Yeah.
then they certainly have that responsibility.
And is it better for lots of the ones you're talking about that they are taken out by the franchisor, or it happens either way, the franchisee or the franchisor? It's not cheaper. I'm like bringing it back to the cost of living issue. Is it cheaper to have one policy that everybody just is part of?
Where's the opportunity to be able to look at a group-wide policy, then again, we will certainly look at exploring those and to identify what opportunities present themselves. You would want to do that in a situation where there is commonality across all the businesses. So for example, there are some franchise systems out there where they will have a group public liability policy. Because it warrants and justifies that. There are others that go, there's no real commercial advantage to doing this, or there is a hesitation from some insurers to actually say, we're happy to do public, so we're happy to do group policies, but in this instance, we don't have an appetite to do that. So again, we would look to identify the appetite from the broader insurance market and then come back and present that back to the individual business and say, the market is happy to explore this, and we will explore that on your behalf. Or insurers are walking away from this, and it really comes back down to almost everyone for themselves to take out their own policies.
And the cyber stuff is very, topical at the moment, isn't it? There's a fair bit of that, people being hacked into and stealing data and all that sort of shit.
Oh, absolutely, and it's an interesting one when you talk to a business owner. One of the things in my role, one of the things that I certainly am at pains is to say, when you're looking at cyber and data protection, it's not necessarily fearful that as a business owner, I'm going to get hacked by somebody out of an overseas country, whatever that might be, as has been in the media. It protects you and covers you for a situation where if you have access to critical and sensitive information on your laptop or on your phone or a tablet, and you leave that in a taxi or it gets stolen or whatever the case might be, that is considered a data breach, and so therefore there are things that as a business owner you must do, and if you don't do them, it is a self-reporting system, but if you don't do them, then there are some significant penalties and fines that may come your way. But it is even things like if somebody in the business believe that they've received an email from the CFO or the CEO that says the payment that you're about to make right
just
now.
bought a horse.
Just, hang on a second, we've just changed bank accounts. We haven't had a chance to tell everybody. So, just make sure that this payment goes into this bank account and get it done now.
Yeah.
And then somebody in good faith says, yes, I will do that. And because for all intents and purposes, the email looks like and
Yeah.
the terminology is correct, and the way that they've been referred to them, and so forth. And somebody goes and does it, and then they go back and see their CEO, CFO go, "I've done that," and they go, "What are you talking about?"
Yeah.
That's an instance of where again a cyber and data privacy policy will kick in to be able to make amends.
And have you seen times where the insurers haven't paid them because there's something that's happened within the business that says, well, look, you're just an idiot. So, you can't be that stupid, so we're not paying this one.
The biggest issue, or one of the challenges around where insurers will not necessarily make a payment is if the disclosures and disclaimers are false. So if somebody, as part of the data gathering process and putting a policy together and then identifying the premium around to that, if somebody says, "Oh, we have these checks and balances in relation to online payments and things along those lines," and then all of a sudden,
and it's just
there is
one
an incident.
person who's got the code for everyone else. Yeah,
Exactly. And if somebody says, "Oh, we have these measures in place, we have these checks and balances," an incident happens, the insurer will obviously want to come in and do their due diligence to be able to see exactly what happened and to verify that what the business says they have and the manner which they say that they undertake their business processes and procedures is accurate. And then if that's seen not to be the case, then
we've moved more into fraud than cyber security at the moment. We better ring Dev and Belinda to make sure that they've got yours and my credit cards.
But again, you want to make sure that what you're putting down in relation to how you operate your business is accurate. That's the underlying principle. And it's no different than if somebody says, "I want to take out insurance on my property," and they say there's a little checkbox that says, is there asbestos in the property, yes or no? And there are some people that knowingly, unfortunately, will say, "No, we don't." And at a point in time, if there is an incident and there is a rebuild required because there's been a fire or something along those lines, and it is seen that the disclaimers was incorrect and they were misled on purpose because somebody intentionally did that, the insurer has the right to say, we won't be fulfilling the claim.
Another thing, looping back around to cost of living pressures, is saving money, putting money back in the pocket of the franchisors or the franchisees. So there's new methods to, we talked a bit about leasing in previous podcasts, and one of the big issues with leasing for franchisors or franchisees is the cost of the bank guarantees or the bonds and things like that. So there's new products in the market that can help put money back in the pockets of the franchisees and the franchisors?
Absolutely, and it's very interesting because most people look at insurance as a necessary evil, or it's the expense.
It's a cost.
It's a cost of their business rather than it's an investment in a future where they need to make a claim. But certainly there are insurance policies that can actually put money back into somebody's pocket. So if you're looking at leases as an example, and I'll give you a couple of examples here. So from a lease perspective, most lease arrangements will have a requirement for a guarantee, which is typically bank guarantee. So a business owner may need to come up with six figures, for example, just arbitrary numbers. That's $100,000 that is kept aside for the benefit of the bank that provides the bank guarantee, but that's working capital that the business owner can't get access to, and it just sits there. And on top of that, there are fees that are charged by the bank for the privilege of holding their $100,000 as a guarantee. Something you may be familiar with. Yeah. There is an insurance product out there which is called a lease bond that provides exactly the same protection that a landlord seeks. So once it's established, it's irrevocable, it's unconditional, it pays out on demand. It does absolutely everything exactly the same way as a bank guarantee does, but it is the premium is a small percentage of the value of the guarantee. It can apply to new leases, but even to existing leases, it can unwind that arrangement, which means that $100,000 that you've had set aside, or $500,000, or whatever the amount is, as working capital can now come back to the business that they can invest.
So landlords all understand that?
We work with landlords. There are a growing number of landlords. There's about 50, 60 plus landlords nationally that are accepting this product. There's a number of private equities that are aware of this product and that are accepting it. There is family offices who may have property and they are the landlords that are, again, once it's explained to them that they understand this product and they're accepting it, the number is growing. But again, we will work with, in this instance, we'll work with the landlords to educate them if they're not aware of it, to be able to provide them the comfort that they're not losing anything. In fact, they're actually gaining because the administration and the management of this product is actually a lot easier than what if they're dealing with a physical bank guarantee and a certificate that they need to put in a safe somewhere and all of those things, and the potential of fraud in relation to bank guarantees is something that's right. That there is more and more visibility of that. All of that is eliminated through this digital product. It provides everything the landlord wants. Once we've explained it to them and it's got their comfort, we're finding that many are saying we will now accept this, and we're happy to unwind existing arrangements and put that working capital back to the landlord, to the lessee, to be able to say, it's yours, invest this back in the business as you want. Are all landlords accepting this? We'd love to say yes, but unfortunately no. But are there more and more? Absolutely. So there are major landlords in shopping centres such as Vicinity and Dexus and Charter Hall and a number of others that are starting to accept this product. And it is available in Australia and New Zealand. It's interesting because digital e-guarantees now is the standard internationally. It's really only still Australia and New Zealand that are a number of years behind the rest of the world when it comes to looking at guarantees in that lease agreement.
But like those big names that you just mentioned, now that they're on board, the rest will follow.
We would hope that. We think it's just a matter of time and education, and there are some out there that will say, this is the way that we operate, this is the way that we've operated, always operated, and that's just the way that it is. But again, over time, we expect it to change.
But if you have a look at it, for some franchisees that are in bricks and mortar, that are paying $100,000 in rent, let's just say, and there's not too many locations around that are going to be less than that. It's usually going to be 3 to 4 months. So there's 25, 30 odd grand that's tied up, or they have a holdover of some other property of their house or something or other that's restricted. It's a shitload of money.
It is, and especially if you're a business owner, franchisor or otherwise, and you have a number of leases. That number, even if it's 30,000 and up, can quickly become $250,000, $500,000, $1 million. So the ability to be able to say, there's a product out there, it's classified as an insurance product, it can release cash now, and for a fraction of the cost, release that working capital and put it back into my business. That's got to be something worth considering.
Well, we did one with you, which was 300 odd thousand. And that was over 2 properties, three properties, I think. So,
let alone if you're a pharmacy that has half a dozen different locations, or a franchisor that has 50, 60, 80 leases that they're managing. Again, it's a significant amount of cash.
Yeah, it's a lot of money. No, that's good. I'm glad they're getting on board, because that really is a game changer. And if we can get the mum and dad landlords in the strips sort of understanding that's bloody fantastic.
And there are a number of other products out there which are referred to as surety products, which this lease bond, this lease guarantee is, because it's purely and simply based on the financials of the business in question. There's no need for an additional guarantee or for a holdover property or for directors to provide personal guarantees or anything along those lines. It's purely based on the financials. But again, in other markets, in other avenues, particularly around construction or manufacturing, where bank guarantees may be asked as a consequence of doing business, and again, they can be fairly significant. There are a number of these surety products available that will be accepted in lieu of a traditional bank guarantee, because again, it's about freeing up that working capital so that it can be used for the benefit of the business.
So we just had the shop fitters in here, and no one really likes shop fitters because they think they charge too much and they always talk to them last. but I think they talked to you last. Are you okay? Do you need a bit of a hug at all for, insurance people? It's not very horny, is it?
Horny's an interesting term. No, I wouldn't necessarily think that it's a sexy topic.
How do we make it horny? Because it should be the first thing.
It's not everyone will view it that way. I certainly think it's interesting. And horny, don't know, but I know that insurance, if managed properly, can deliver a lot of value back to the business, even in just some of those examples of putting cash back. The biggest thing for us is time. We really, it's of great benefit if we have more than 48 hours notice by somebody that says, I'm taking out this lease in 2 days, or I'm starting, my business is going live in the next 24 hours. I need these insurances. Can you please, arrange some insurances for us?
Or I've just realised that my premium's due today.
Yes.
And it seems ridiculous. It's gone up by 50% or 100% or something.
Which we have experienced.
Yeah. What can we do today to sort this out for me?
And I've lost track of the amount of times I've received a phone call and panicked somebody going, it's just landed on my desk. As you said, payment is due. Can you do something? The reality is, the more notice that we have, the more that we can do.
It's the same. It's actually interesting. The analogy is like both the building a site or managing your insurance. Like if you're a retail business, you have to have them. But if you actually plan around them, you can actually save yourself money both times.
A lot.
And so it's the same thing. If you're trying to do insurance at the last minute, you're probably not getting the right insurance, or you're not thinking about all the different things that you're trying to cover for. And so then you have a claim, and the shit turns. Yeah. That's when the shit comes out. So
and you'd be surprised how many instances there are where somebody may have a policy or a number of policies, and they're paying for the same thing 3 times and they're not even aware of it.
Yeah.
Or a number of those sorts of scenarios. In an ideal world, speaking from our perspective, our view is we can't insure you if we don't know you. So therefore, we want to spend time with you to get to know your business. And this really, hopefully, is the case with every insurance broker out there. But it is absolutely, the more time that we have to get to know the business, the more time we're able to do the due diligence and to come back to you going, these are opportunities for consolidation, improvement, cost saving, go to market, even adjusting the time of the year that you're buying your insurance, because believe it or not, there is actually a better time of the year to buy your insurance that can deliver you some significant savings, rather than what most business owners do, which is around the end of financial year or the end of the calendar year. There is actually a better time of the year to get your insurance.
What is that, or is that your secret?
No, it's actually Q1.
Really?
So, probably
July,
around the February, March, April timeline is probably the best time
calendar
of the year.
year Q1, not financial year.
Q1 of the calendar year is probably the best time of the year, and there's a number. I won't bore with you with the reasons now, but there is actually a logic in relation to that. Again, ideally, we would hope that a business owner would have the same sort of relationship with their insurance broker as they would with their accountant or lawyer, which is spend time with them, meet with them on more than one occasion of the year. And the more that we get to know about their business, the more that we can proactively do for them.
It's because he's not horny. And we're gonna wrap it up there, because I think that people probably don't want to spend any time with their insurance brokers or their lawyers for that matter, but that's fine. We recommend that you do. Thank you. Thanks a lot for your insights today, Richard.
Thank you.
Very good, mate.
Thank you. And if anyone else is listening today has some topics that they'd like to dive deep into, please let us know. Thank you.
Thank you.
Thanks, mate.